And thank you for joining us this morning. Let me ask you, just how important is this, given that the market, I think, understands that Russia has plentiful reserves. It just doesn't have access to them, maybe at the moment, to repay in dollars.
Good morning. So to be honest, we are not talking about a Lehman-like event. Yeah? We are talking about 4 billion CDS outstanding on Russia CDS and also 1.5 billion in indices. So all in all, it looks like a small amount. However, it is important because, the biggest effects are always this so-called second and third round effects. Yeah, so there might be some other markets negatively affected by what is going on with Russia, and therefore it is, from my perspective, ridiculous. Yeah, Russia would be easily able to pay 117 million of dollars. Yeah, so we are talking about a technical or political driven default, but not a necessary default in respect to the economic situation of the country.
Where does this go next then? Do the bondholders look to negotiate a settlement on the outstanding loan? And if so, what kind of recovery rate could they expect to see?
I would say, if you fight Russia in a UK court or a US court, what should be the recovery? If Russia is not willing to pay a coupon or not willing to pay it in hard currency, why should they be willing to pay a high recovery on their bonds? Yeah? So I would expect in such a situation, recovery rates will be very low. Currently, the market is pricing in a recovery rate in the low 20s. Yeah? I would not be surprised if it would be even lower in case it would happen.